Hey guys, Zoeb here from OneGlanceTrader.com and welcome back to my Babypips Forex education video series. And as always, if you want to go back and check out previous episodes around the Babypips Forex education, head over to my channel One Glance Trader and go to the playlist section and you'll find all the videos there. So in this video, we are in grade 2, part of the elementary school, looking at Japanese candlesticks. And in particular, we'll be focusing on single candlestick patterns. Now, this is probably going to be one of my favorites videos. That's mainly due to the work that I've been doing with my indicator, my OGT price action indicator, which, the most of all the candlestick patterns in the indicator so far, the best feedback I've had has been for the pin bar, or the hammer and shooting star as it's probably known in the wider community, especially in these videos. So again, if you want to download the OGT price action indicator, head over to oneglancetrader.com or just click the link in the description. 100% free. So single candlestick patterns, as I mentioned, it goes into firstly the hammer and the hanging man. So again, my indicator will give you hammer signals or the pin bar signals from that perspective, either going with the trend or as a counter trend, reversal trend, which is kind of what this image is showing here. And then we've also got the inverted hammer and the shooting star as well. So again, my indicator looks at shooting stars from this perspective, again going with the trend or again counter trend as well. And yeah, so these videos are from a channel called Informed Trades. They've been around for a long time. When I first started learning about candlestick patterns and I was searching on YouTube, these videos came up, and very informative. Tells you very simplistically what the patterns are, how to use them, and really how to use them with other confluence indicators, which is why I've chosen the informed trade videos to go through these particular candlestick patterns. So again, you can download my indicator at oneglancetrader.com or click the link in the description. But for now, before you do that, please check out the videos from Informed Trades coming up now. Hope you enjoy them.
Okay, so like the spinning top and doji, which we've studied in previous lessons, the hammer candlestick pattern is made up of one candle. The candle looks like a hammer, as you can see here, as it has a long lower wick and a short body at the top of the candlestick with little or no upper wick. In order for the candle to be considered a valid hammer, most traders will say that the lower wick must be at least 2 times greater than the size of the body portion of the candle, and the body of the candle must be at the upper end of the trading range. When you see the hammer form in a downtrend, this is a sign of a potential reversal in the market, as the long lower wick represents a period of trading where the sellers were initially in control, but the buyers were able to reverse that control and drive prices back up to close near the high for the day, and thus the short body at the top of the candlestick there. After seeing the pattern form in the market, most traders will wait for the next period to open higher than the close of the previous period to confirm that buyers are actually in control of the market. And that's pretty much true with any pattern that's one candlestick. Most traders are going to wait for confirmation on the next period of trading before taking any action as a result of the pattern. 2 additional things that traders are going to look for on this one is, like some of the other patterns we've looked at, a long lower wick is going to increase the significance of the pattern, as well as an increase in volume on the period that forms the candle is also going to increase the significance of this pattern. So let's look at a chart here. You got a chart of research in motion here, and we see we have a downtrend in the market, and then we have the hammer, which we can see formed here. And then we have increase in volume on the day that formed the hammer. We have the next candle, which opens higher than the close of the candle that formed the hammer, and then we do have a rally that comes after that in this specific example. Okay. The hanging man is the opposite of the, or it's basically the same thing of the as the hammer, but instead of being found in a downtrend, it's found in an uptrend. Like the hammer pattern, the hanging man has a small body near the top of the trading range, little or no upper wick, and a lower wick that is at least 2 times as big as the body of the candle. Unlike the hammer, however, the selling pressure that forms the lower wick of the candle and then the candle closing in the upper end of its range is indicative more so of a sign of a potential reversal to the downside because the selling pressure is not anticipated in the uptrend. So where the hammer, the selling pressure that forms the lower wick is kind of expected because you're in a downtrend, here the selling pressure is not expected, which forms the lower wick of the hanging man. So that's a warning sign that there is selling pressure in the market. Especially if you're in an overbought condition, you know, those types of things, you may start looking for a reversal there. Okay. As with the hammer and as with most as we said, with most one candle patterns, we're going to wait for confirmation, or most traders are going to wait for confirmation that selling pressure has in fact taken hold by watching for a lower open on the next candle, and traders are going to place additional significance on the pattern when there's an increase in volume during the period that the hanging man forms, as well as when there's a longer wick. Okay, so let's take a look at an example of a chart here. We've got the uptrend, and then we have overbought conditions. You can see the market ran up there pretty significantly. We have the hanging man there. We don't have an increase in volume on this one, but we do have the lower open on the next candle and increase in volume driving that candle down lower really significantly. So a pretty decent reversal pattern in play there, and obviously hindsight's 2020 on this one. We may have missed out on that one had we been trading it live, but you can see, you know, a good example of a situation where the hanging man formed there. As its name implies, the inverted hammer looks like an upside down version of the hammer pattern, which we learned about several lessons ago. Like the hammer pattern, the inverted hammer is comprised of one candle, and when found in a downtrend is considered a potential reversal pattern. The pattern is made up of a candle with a small lower body and a long upper wick, which is at least twice the size of the body of the candlestick. The body of the candle should be at the low end of the trading range, and that there should be little or no lower wick in the candle. What the pattern is basically telling us is that although sellers ended up being able to drive the prices back down, at some point during the trading period, buyers were able to drive prices up. And the buying pressure during the trading period that this candle represents is of concern when looking at that in a downtrend. The fact that there was so much buying pressure that drove up and made that top wick, that even though sellers were able to push it back down, this is a sort of a warning sign that a potential reversal in the trend may be coming. So here's what it would look like trading it on a chart. You want to see a downtrend in place as we have here, and then we have the inverted hammer followed by higher trading. Like all one candlestick patterns that we've looked at, you want to see a confirmation on the next period of trading, and we do have that here as the next period of trading. The market moved higher during that period, and like most of the patterns that we've discussed, or most of the things that we've discussed, traders like to see a increase in volume on the day the candle was formed that forms the inverted hammer. And the longer the wick is that forms the hammer, the greater the potential and the larger that reversal is thought to potentially be. And you can see in this particular case, we do have the increase in volume, and then we do have the reversal in trend that does happen there. The shooting star is exactly the same thing as an inverted hammer, but instead of being found in a downtrend, it's found in an uptrend, and thus has different implications. Like the inverted hammer, it's made up of one candle with a small lower body, little or no lower wick, and a long upper wick that is at least 2 times the size of the lower body. The long upper wick of the pattern indicates that at some point buyers were able to drive prices up during the trading period, and the short body indicates that sellers were able to drive prices down to close near the bottom of the range. Now, since this pattern is found in an uptrend, this time the selling pressure, which is not going to be expected in a downtrend where it was expected in the, where it's not expected in the uptrend, in this case where it was expected in the downtrend, is going to call the trend into question. So that's going to be sort of the alarm sign that gets traders looking for a possible reversal in the trend here. As far as trading the shooting star goes, you're going to want to have an uptrend in place. This is a fairly small one, but you still, do have several bars of up trading there, enough to form a small uptrend there. You do have the shooting star there. You can see it followed by the down trading. You've got an increase in volume there on the day that forms a star, as well as the following day that confirms the pattern. And then we do have a sell-off that occurs after that. For those of you who've been following my lessons, you should also see another pattern that's in place that's confirming that this might be a potential good trade, and that is the double top.
And there you have it. I really hope you found that useful. I'd be very grateful if you could like, share and comment on this video, and also take the time out just to subscribe to my channel. I really want to try get these educational videos out there to as many traders as possible, and really show them the way that they can learn to better themselves in Forex trading and also become a more consistent and profitable trader. And I shall see you on the next video.